Yeah,
I'll trade
FOMC day.
later. I'll trade
I'll,
later once market moves like a maniac.
oh yeah.
That's where I like to trade. That's comfort. That's comfortable for me.
Oh, nice. Well,
I
I'm
like
gonna
being in the
be
fire.
I'm gonna be on Hackers trading it today, so we'll see how that goes. but
I
but
want to
but
know.
I'll tell you how it goes. But I love something about, I don't know if I've ever told you, hey guys, this is for you, by the way. I love this FOMC meetings, especially chart primes classes, because Alex always have a clear perspective of what's going to happen, and so I want to take advantage of that. What do you think is going to happen today, Alex? Do you think like the dump is already cooked in? Do you think that we're going to have a higher sell off? Buy the rumor, sell the news was earlier this time. What do you see like I mean, other than the crazy market movements, like talking about the 4 hour time frame, the 1 hour time frame, what do you see happening this time that we have such bad numbers in jobs and such a possibility to have 50 rate points being cut this time? What is your
Mm.
forecast?
Have you ever seen this site here? It's called CoinGlass, but it's liquidation maximum pain.
Yes.
So I always like to look at like the 1 week here, and it kind of tells you where the most pain is. 1 week, 2 week. So right now it's saying that Bitcoin's maximum pain is 114,200. I think that's a retest of that head and shoulders pattern. 4,400 on ETH, 225 on Solana. But yeah, I'll share this in here. This obviously is a free website, so that you guys can use it too if you guys want. But it's always important to know where's the market, because the market, let's face it, the market likes days like today to go hunting. It's like it's like Thanksgiving and you're going to get a turkey. This tells you where the most turkeys are. Okay. So we want to go hunting as well. So if we can understand where the most pain is for most longs, we can take advantage of that. So when we come in here and we look at our charts, it's pretty simple, right? It's pretty simple. We don't have to overcomplicate a day like today. We know that Darth Maul is going to be here. Darth Maul's lightsaber. You're going to have Darth Maul here. He's going to come in, and you're going to see a beautiful candle like this and like this. Okay, this is what it's going to look like today on your whatever time frame. Okay, it's
Like
going to look
even
like
like
this.
that,
Okay,
even cricket, right? Just kidding, just kidding.
yeah, it's going to look like this. It's going to go one way. It's going to go another way. Then it's going to go another way. Now, my little thing is that I always look for the first move. If you can identify the first move, that's the way they're going to go. However, you must not buy this candle unless you have something in here. And I'm not saying it's going up today, guys. I'm just saying this would be the first move, okay? It can go down too. The first move can be down. You do not buy this candle unless you have something here before the first move and your stop loss is at entry. Because you're not trying to guess here. This is not where you guess. You wait for the first move. When you get your first move, you identify it and you'd be like, okay, so it went up. Very easy. You got like 2 minutes to decide the direction. Okay. Then maybe less, maybe 1 minute. Okay. It goes up. You've identified that. So what is going to happen is that it's going to wreck everyone. Okay. So everybody, oh my God, it's going up. Go, 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 go. Bye, 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 bye. Boom. You're destroyed. Okay. It comes back. This is where you want to buy the first move. Okay. If it's up, if it's down, it's the opposite. Okay. You want to sell the first move. If it dumps first, right? If it dumps first, you don't want to sell into the dump. You want to wait for the pullback and you want to sell into the liquidity of these guys here FOMOing in. Okay. Is this perfect? No, but it happens a lot. It happens a lot, and that's how I typically look to trade it. Okay. So you get 1, 2, 3 moves. There's always threes in trading. If you don't know, you'll start to see threes everywhere. There's a reason why there's 3 white soldiers, 3 black crows, 3 3-point reversal. There's a 3 drives pattern in your trading view right here. There's 3 peaks on a head and shoulders pattern. 3 is definitely, yes, it's a magic number in trading. Okay. Things happen in threes, right? You typically, for topping patterns, you'll get a double top and an SFP, right? That's where you short. NOC. Speaking about that, did you sell at 3 a.m.? I told you, bro. Bro,
You gotta be
again,
kidding me.
3 days in a row.
3 days in a row.
Bro, 3 days in a row. What did I say? Sell at 3 a.m. I
3
told you
a.m.
that. Bro.
Then I think you find it. I think you find that
Bro,
bot,
I know the secret. I found the secret to life, bro. The money printer.
Oh shit. We'll see. What I want to see, man, and I'll be totally, I mean, I've done this once in the past, like a long time ago. But what I really want to see, and I having my architect pencil up in here because I want to point things out, all right, it is that
Uh-oh.
would these bots survive after today? If it does, I'm definitely pointing up and selling at 3 a.m., man. No questions asked. It doesn't matter if it says to the moon. I'm shorting 3 a.m., bro. It's
Bro,
freaking
if it
awesome.
happens tomorrow, it happens in threes though. Maybe it's three times where now we strike out tomorrow.
You think?
But look
I
at
don't
this,
know.
man. Every time, man.
time.
Look at that last night. Look at this.
And what is the volume sold?
So good.
Yes.
Where's
You just calculate the I mean, it's in the same zone. So how far the percentage drop down?
almost 2% each time?
Each
One and a
time,
half,
right?
2%.
Consistent.
Each time.
That is a bot.
1.5.
1.5. 1.
110. 2. Yeah, 1.5 average.
Yeah, that's a bot, bro. Well, I think I'm not. I cannot say for sure, but
That's
that seems like a great bot.
crazy.
Yeah, it is.
Bro, I'm going to just go like this. I'm going to go like this. Wherever price is at the end of the day, you go like this, okay? We'll be all right.
We'll be all right. Love it.
I had that area too, right? Like, obviously, this is
Yep.
a key resistance zone. So last night I had this area for the sell. My box actually was actually bigger, but crazy 3 a.m. So, like I was saying with the plan, like this strategy is not perfect, but it does work. Okay, so you got 1, 2, 3. The 1, 2, 3. The real move. You don't trade this. You trade everybody get liquidated. The key here is the patience in this dump. Okay, so as we come down, right, you're not trying to FOMO in yet. All you want to do is wait for a confirmation candle. You'll typically get like a doji engulfing, some sort of reversal candle in here. You buy that candle, then you come back up. Okay, you just wait. This is wait, buy. Okay, and I've done really well with it. Okay. Clearly, we're rolling over here, but what's happening right now if we're looking at price action? Why were we looking for sells in here? So you guys know me pretty well with the volume. This was a shelf of volume last night. It literally hit it perfectly. Okay, that's why we were looking for sells in here. This is a range within a range, right? Well, guess where we're at? We're in another range, right? So could we sweep down below here? Absolutely. Where is maximum pain, guys? Oops, my thing froze. Where's maximum pain? Right here. So what are we looking for today, right? We are looking for an SFP here, a flip and go here. Okay? Very easy. I would like to see the SFP here. So big dump and then a reclaim and then go. I wouldn't be surprised if we come in here. If we're looking for imbalance, right? What we always want to look for in the charts is imbalance. Where has price gone up too quickly or gone down too quickly, right? That's how we get Bart Simpson patterns, right? Because price moves up so fast that market needs to have equilibrium. It needs to balance the books, okay? So we have that in here. Okay. Even this morning, look at this. We had that in here, right? We came up to our resistance. Guess what? We moved up really quickly here. Guess what? We came right back down. There it is, imbalance, right? Right now we're hanging around the point of control of the range, just chilling in here. So for me, no trade. Let's be patient. There might be some opportunities coming later, so I think that's the best thing to do. So I think if I'm a betting man, I think they're going to cut the regular 0.25. I don't think they're going to cut 0.5. I'd like to see them cut 0.5, but right now I'm in the 0.25 category.
What will like
0.25.
Sorry, so
You
really
think they
quick,
cut
what would you like
0.5?
it? That's what, dude. I'm scared of it because if you see like in Piper is going over this over and over in the morning market report. Historically, when we have these job numbers, this inflation, and they cut 0.5, they make it worse on the economy, and it leads to recession.
Depends where. It depends where.
Uh-huh.
Because OC, look, this is where they cut 0.5 last time, okay?
Yeah, but last time we weren't
here.
having the same conditions that we
Recession.
have right now.
Yes. So they cut 0.5 in here.
Mm-hmm.
We had that rally. We had a rally into late September. I believe they cut. We could probably see the day here. You'd have to look up the date. Maybe Daga will find the date because he's quick.
He's always on spot. Yeah.
Yeah. I could Google it quickly. Ask Rock. September rate cut 2024. Let's see what it says. Does Daga have it already?
September 18, 2024.
17th, 18th, yeah. Okay, so it rallied a little bit. That's interesting. It rallied a little bit and then it dumped. And then Valhalla.
Nice.
Yeah, because typically after a rate cut, you do get a dump and then a follow through, right? Like statistically, you get like a month of down and sideways, and then you get like 6 months up statistically. So I don't think we do 0.5. I think they want 0.5. They're very late, OC. They're very late.
Yes. And compensating
very
that
late.
bad, that might, I don't know. That's what I'm trying to come at. No, I mean we know that there's needs to be a rate cut. They're already too late, right? So whatever they're trying to put a band-aid on a freaking earthquake crack, right? So thing is, is it gonna go worse or bad? I mean, don't get me wrong, guys. I think that we're gonna have a lot of shakiness throughout these couple of hours. A lot. We're gonna be stopped out top, bottom, and then have a reaction, which is gonna go to the upside. I strongly think that we're gonna go to the upside. All right. How far to the upside is gonna be the question. I don't know. I think it's gonna be at least a week of pump, at least. Like, let me measure this. Let's go to Bitcoin. And Bitcoin, a weaker pump, I don't know, or maybe something like a 10% up, which will get us somewhere around 124, hitting all-time highs.
Let's see.
That's what I'm expecting.
You like my picture of the Fed right there? They're fixing the crack.
I love it, man. Exactly. bro. If you cannot fix something with duct tape, it's clearly that you haven't used enough duct tape, bro.
I used to have in high school. I used to have a duct tape wallet.
Really, dude, I've seen those. They're freaking fantastic.
Oh yeah,
This,
it was next
uh-huh.
it was next level, bro.
I do
It
remember
had all the
when.
flaps and everything, man.
Really? So you made like a
Oh
very
yeah,
pro one.
it was a professional one. It looked like this, like
Oh, holy shit. That looks amazing.
but
I do
with
remember
actual
when the
duct tape.
US came up with this new paper envelope that was almost indestructible. And that's when I got my very first wallet out of that kind. I loved it.
Trade
Oh,
flies here,
shoot.
man.
Did I kick him out? Sorry, bro. I was trying to bring you up in the audience. What's
I'd
up,
kick
my
him
friend?
out too, man. He brings too much alpha every day.
Dude,
Oh, yeah.
F that guy, man. He's
You're going to
trash.
get us fired, bro. What's up,
What
brother?
up?
How's it
Chilling,
going?
man. It's
Don't
going all
mess
right. Going
with
all
the
right.
trade fly.
Looking forward to
He's
the
whooping
day,
my
man.
ass in fantasy football.
Well, I have about 15 years experience on you there, buddy. So you can whip me in scalping. I'll whip you in fantasy football. Let me have my thing.
Okay.
That's what I was telling him, but he
Yeah.
refuses to lose in Halo.
I don't
Me?
lose in Halo.
I don't even play Halo, bro. So
No,
you want
you
to play me in
should.
COD?
You play real
COD
life
Mobile?
Halo, bro.
Yeah, I know, right?
Like, fuck Halo,
Break
you
from
do
my
real
job, would
life.
Oh man.
Okay, so what are you guys thinking, man? So you're both thinking 0.25, I'm guessing?
1.5, I'm
0.25.
2.5?
Oh, see.
Sheesh. I mean,
Yeah,
I
it's
don't know,
it's
bro.
incremental
It's,
change, man.
yeah.
Incremental
I,
change. Yeah.
I mean, we'll see. We'll see. I am expecting a lot of anticipation. That's that on sentiment. I mean, a lot of volatility. Everybody's saying point 0.5. Well, most of the two areas are saying 0.5 and 1 and 2.5. Right. I'm aiming in the middle. I don't know. I'm trying to be average. So that is actually my trick. Like if you point me to take a choice, I would actually be willing to say 1.5. I mean 2.5, as everybody else it's also doing, not a half of a percent, right? But since seeing that kind of like a push through, I would rather say 1.5. It's not exactly at the middle, but it's going towards in between. And that is because they're pretty late, yes.
Yeah,
But
but it doesn't matter to Pal.
yeah, well,
Like he's
they're right.
all about incremental change. He doesn't want to shake the market. He doesn't want to shock the market. Like it's his MO.
Yes.
And like all you have to do is go back to what he's done historically, and it's 0.25 all day, every day. So
You're
like
right.
even if they're late, he's said it, like if you actually listen to when he talks afterwards, he's like, hey,
Mhm.
we're gonna make this change and then we're gonna assess. And then from that assessment, we'll figure out, are we gonna add another rate cut, or are we going to keep it where it's at? And that's been his MO the entire time, at least under this presidency and the last one, honestly. So, that's my expectation, no doubt about it. It's just the reaction that we're expecting at this point. So very interesting to see us, pulling back, but again, not too surprised on that either. It's interesting to the fact that some people were thinking, hey, we're coming up to a key level, we're going to push through that, knowing that we're going to get rate cuts, and I just didn't see that because traditionally, I won't say traditionally, but from my observation, I've seen a lot of times we kind of have this uneasy, low volume going into an announcement, right? Especially this one. This one is, I'm not going to say it's big in the context of like it's so important, but everyone knows that there is actually a realistic probability that we're going to get a rate cut. And we haven't seen that in a very, very long time. So I think there's that moment of like, oh, okay, let's pump the brakes and let's see what happens. And then it's really easy to jump in the market after the fact, right? And Alex gave you a good alpha right there. He's saying, hey, you might see a little pullback before you see it actually take off. And there's two things that are lining up for me right now. If we get the rate cut, yes, at some point you should start seeing positive movement in the market. But also, if you look at historically, October and November of the last 2 years, what have we seen? We've seen positive movement in the market, very aggressive. And if you look at it, like if you look at the charts, it's been very aggressive in October and November specifically. And you're also looking at, where are we at in the 4-year cycle? So like those 3 things just fundamentally are bullish catalysts for seeing positive price action going into the end of the year. And that has nothing to do with really looking at the charts besides looking at the data over the last 2 years. So, I'm cautiously optimistic, as weird as it is to say, with Bitcoin at 115,000, because who really would have thought we're talking about Bitcoin 115 a year and a half ago, right? We were doing our projection videos, and like I honestly I didn't see us over even 100,000 last year. So here we are, man. I don't know. I'm again cautiously optimistic. The thing the concern that I have is the macroeconomic picture, and that has a say so whether we like it or not. And so if we see that where we start getting into the big R word when people start talking about a recession and a pullback, and having a potential recession and going into a bear market potentially, given the macroeconomic data, is the weird part that we have to struggle with, is like, how is Bitcoin going to hold up? And I would say if we really enter those conditions, Bitcoin doesn't have a huge fighting chance in terms of diverging from the market, right? We've seen the last bear market where Bitcoin almost paralleled NASDAQ. Call my bluff, go back, look at the data going in through 2021 into 2022, pretty much paralleled the NASDAQ. So keep an eye on that. But as of right now, I think fundamentally, without the macroeconomic data, there's a few bullish catalysts that we could see here in October, November. And I'm not a bull tard. You guys know that.
I'm a bull tard.
Yeah, most of you are. But I am not a moon boy by any means. But there's just things that line up. You just can't argue it.
The jobs is concerning for sure.
Yeah.
Well, the
And
jobs is
hands
what'll
down,
push us over the top to get a rate cut.
yeah, hands down, I think you
Yeah.
convinced me. It's not like because you saying stuff convinced me, but because you have a point right there, which is historically making a decision, right? So as you mentioned, all day, every day, every single time that had happened something, he just. As you mentioned, he doesn't care. And I think that is important because not caring doesn't mean, I would say, not really not caring, like don't give it a shit, right? But he's kind of like, all right, what had worked? What is mathematically speaking what we should be doing? What does the manual does or says? What should I be doing? Right? Not taking the risk, not outstanding. If he was unmuted when or unmoved when Donald Trump was pushing him, what is he going to be right now, right? What would be the actual motive for him to do it? And I would say nothing, not really. Just looking at what the his part of the job is and staying kind of like a constant. So yeah, I mean, actually, you got a really strong point right there, and I really liked it.
Yeah. Well, I mean, I thank you and Piper for having me on the morning show. Tuned in my macroeconomic perspectives there. But seriously, a couple of good questions in the chat, right? So looking at that, and one of them, he was asking stock scalping samurai, said, if we get no cuts, do you still like the typical statistical November pump? I would say not as much, to be honest with you. And the reason is we don't get cuts, the market has already priced that in my mind. And so now you have to have a reaction to not getting the cut that you expected, right? Like the whole market at this point has pretty much priced it in and said,
Yeah,
with
it's forward looking for sure.
80% probability that we will get a cut. And if we don't get it, then it's like, oh shit, like now what? Why aren't we getting that cut? What is so bad that's preventing us from getting that cut? And that's going to be the question. And then you're going to have a very negative reaction, at least initially. So November we might be able to shake it out, by November. But I would say it lowers the probability of having that impulsive move to the upside.
I agree.
Nice. Yeah. So basically, let's hold on and see what happens. I mean, until we have the markets hate uncertainty, right? That is just a fact, right? I mean, right now we have almost a certain degree that we're gonna hit cuts or rate cuts. I would say that not having rate cuts, it is the right now statistically speaking, that will be the lower probability. And well, then the next question is how much of a cut we're going to get, right? Based on that, how much cut we're going to get, we're going to have the very first emotion reaction, and then we're going to have the next pump. I would actually be calling for something like, I mean, for a bigger pump that we've been seeing. Let me bring out my charter here really quickly, just so you guys can see what I'm expecting here really quickly. Here it is. Based on what I'm expecting, I do expect to come back a little bit down here. And once we have this shakeout on today, we might have another 8% run up that will get us somewhere around 124, basically completing the base range. And if we get that base range or megaphone that we're creating, that's where we need to define either breakout for an actual all-time highs like that is worth it, or the next run down going ahead into the next pump. All right, let me draw it. Let me draw it. Something like this. All right. If right when we are in here, we either break with strength or reject, or we reject. If we reject, I think that we're going to go for November, December pump right here, and that's where we're going to create the next run up. I don't know, 200, 200 and something. But I would say that a very key area, which is going to be right here between at the end of this month, pushed or reacted out of the cuts from today. So that's what I'm saying. But I don't know if you guys agree. Do you see something different, or are you expecting something other than this overall movement?
Yeah, so for me, you guys know my process at this point. I'm a wait and see guy, right? So like
Yep.
I will identify key levels and I'll let the price come to that level. And then once we interact with that, then we can analyze like, hey, what was the reaction to that? Are we looking at an SFP? Are we looking at a liquidity grab? Do we see a very strong wick with buying pressure coming in? Like my process now has really tailored around evaluating the reaction to a key level that I essentially draw a line in the sand. And I'm like, all right, cool. Like, what are we doing? Are we getting candle closes under this? Are we seeing an impulsive move through that level? Are we seeing multiple retests of that level? Like the structure in the candles will talk to you when you interact with those levels. And that really is my starting point for even saying which way we're going to go, right? So a very key level for me that I'm looking at right now. And please, I always have to preface this because I don't want you guys thinking that I'm saying this is where it's going to go. I'm prefacing it by saying that I'm looking at a level that is kind of lower at about 107. But there's reasons for why I'm looking at that level. And it's relatively simple. You have a POC of the previous range. All right. So you have a POC of a previous range. You have a very strong horizontal at that level. And you also have liquidity at that level. Right. So there's a few things that are lining up there for a multitude of reasons why I would say, okay, if price action goes there, I'm going to evaluate on taking a trade there because that's in game here, right? That's why we're talking about this. We're trying to figure out where can we get ourselves in a trade and where would it make sense? And I think about 107 is where it makes sense. Now, again, I just want to say, I'm not saying it's going there. I'm saying if then statement. If it does go there, then we look for that reaction and then we make a decision on whether we can take a long or a short position. So I'm a very patient person. A lot of people know like I won't take a trade for a couple weeks at a time. You know, nothing like Alex where, you know, his patience is 5 minutes. You know, my patience is, you know, usually a week or more, you know, just waiting to see how this plays out and then seeing that reaction to that key level. And then that's when I will make a trade. But my spot trades sometimes are, you know, 40, you know, 50%, you know, moves that I'm looking for. And it's a spot, you know, so yeah, that's what I'm looking at. About 107, I think is a key level. And then of course you got your upside targets. Obviously we're talking about, you know, the 120s, you know, all time highs. And if we start breaking those key levels, you know, you're what are you looking for at that point? I'm not jumping in at a breakout. Like I'm not going to say, hey, cool, we're pushing up. We're taking that impulsive move. Let me jump on the train. That's not my MO, man. So I take those levels, right, when I'm starting to look at higher and I'm like, tell me with a 99% conviction that it will not come back and retest those levels. And I will argue with you all day long that it will come back and retest those levels at some point. The all-time high of this year will be retested, and I'll bet anyone in the room right now $1,000 that at some point it will come back and retest that all-time high as a breakout, and then a retest as confirmation that that is now going to be support vice resistance. And so that's the way I approach this, and that's the way I'll look at it. So I'm never a guy to say, hey, like, hey, let's take a long here. Let's just buy it now. Let's just sell it now. Like, that's not my thing. Like, I wait for those things to happen, and that statistically, probability wise, will increase your hit rate of taking these trades.
Absolutely.
Let's go. Diamond Hands is the past is Zaga DT. I'm just gonna leave it till there. Pretty freaking awesome.
I like that actually. I'm
Love it.
gonna save that picture. That's pretty dope.
Yeah, it is pretty dope.
This is happening.
All right, guys. I think we're not right there right now, right? I mean, the FOMC meeting is not there right now. I would say that, hey, hands off trading today if you think that you have the skills. And this is just a perspective of yourself, right? I'm not trying to push around anybody. But if you think that you have the skills and you want to venture into trading this volatility, go for it, right? Go for it. Just remember to do it with cautious, right? Set your stop loss. Do not invest more, or not even what you casually invest. Invest just a little bit, right? At this point, with this kind of volatility, you're trying to make an extra buck, right? You're not trying just to pick up everything that you let go all the whole month before, right? So you're trying to maybe just have some fun, some casino money, something like that, right? And test your skills. If you think that you're still lacking some skills to actually trade this, still go on into trading view, right? Use maybe, I would say, the 3 minutes, the 1 minute, the 5 minutes charts, and try to apply your knowledge, right? Set your indicators, set your entries, set your support, your resistance, trend lines, open orders, and just don't execute them in real life. All right, so just set up where you would be entering and where you will be exiting. That will help you through, hey, how you react on high stress zones, right? How would you be taking decisions on a high stress and fast moving market, right? That will be always adding to your skills. So just, I would say, like, yeah, if you want to just sit back and relax, great. But there's an opportunity to be taken here, both for practice, right, and for learning. So I would say that have a lot of fun today. I mean, maybe just trying to, gambling a little bit. If you think that you can do that, or if not, well, have fun trading, for fake trading, testing your skills today. But yeah, I think that's what we got so far. Tradefly, thank you so much for jumping in. You actually brought up a fresh perspective to my point of view that I'm completely putting in my table of analysis, and I loved it. Man, I wish you could jump in more often. Of course, whenever you can. And Alex, thank you, my friend. As always, a master class at the beginning of the class. And, well, we need to get prepared for FOMC, guys. If you guys are hackers, I guess I'll see you guys in a minute, and we're going to be trying to trade the FOMC markets, right? Again, it's going to be low leverage, low entry, a lot of stop loss, and a lot of luck that we're going to be needing right there. So other than that, guys, thank you so much. And as always, see you guys tomorrow.
Peace.
Later.